Hi guys, welcome to video number 11 of our series Day Trading Explained, and this time we're going to be focusing at support and resistance levels intraday. Why is it so important to acknowledge and recognize those levels? Because the support level will most likely be our stop loss on a long trade, and the resistance will be our stop loss on a short trade. Or if we're looking for a long trade, we can buy a breakout over the resistance, not necessarily at the highs of the day, but over the resistance, and then use the stop loss at a support level. And the opposite and the opposite when we're trading a short trade. So let's take a look at some examples again from the same list, which is our cherish list. Keep in mind there are only 16 names, 16 symbols on the list. Okay, out of 6,000 stocks, 16 made this list. So there's very special about any stock here in this list. That's why we build this list, to trust those names in the list that they will deliver for us as day traders. Now again, are there any guarantees that they will deliver? No. How do we protect ourselves in case they don't deliver? We use a stop loss. The stop loss should always be in the platform, always. We don't trade without a stop loss. Now, what is the level of risk that we're going to take per trade? It's going to be either based, let me show you what it will be based on. This super important concept, support or resistance. Which is the best? If we have on the chart the exact levels of support and resistance, and they match our risk level, that's the perfect trade. Sometimes we will have only the support and sometimes only the resistance. In that case, we need to either compromise and maybe not take the trade. If the support resistance is 3% apart, should we risk 200% more versus the average? Again, it's a personal decision. If you decide that you want to risk more, okay, that's fine, it's your money, you can decide, but you need to acknowledge that you may be doing a mistake. I mean, you're not risking 5% more or 10% more, you're risking 200% more in this event. Okay, that's a lot of talk. Let's go down now to the basics. Again, we're looking at the same list. We have here 16 stocks. Some of them we've seen before, others we didn't. Let's take a look at stocks that we didn't see. Let's take a look at this one, SBET. I'm just picking at random. So what's happening with SBET? Okay, so the stock gaps up in the first minutes, reaches 14, and then trends down, and basically is doing most likely a sideways move across the whole trading day. And again, what is the trend in the stock? Is the trend higher? So it's up nearly 6%. You can see that was at the end of the trading day. At one point obviously it was higher or lower. That's the final outcome. But during the trading day, it traded actually lower and then higher and then lower and then sideways and up. Can you observe something of value? Let's take a look for a split second at this support level here at 1180. Can you trust the stock not to move under 1180? And if so, where are you going to buy the position? I'm just making a point here, just observing this chart. So if this is the support level, you can see that the stock never breaks 1180. Okay, can you trust it, okay, as a valid support level? And the answer is you cannot trust it as a valid support level. But you can do one of two things. Okay, you can decide that you will buy, let's say, at 12 and use 1180 as your stop loss. In this case, the risk will be 20 cents, which is in this case 2%, and you're willing to take the risk. If your position is $10,000, you're risking 200. If your position is $20,000, 400, and so forth. Maybe you want to take a position of $5,000. That's your decision, it's your account, everything is based on you. The question is, do you trust this level? Now, if this level is trusted by you, act, buy above the level, put your stop loss under the level. So that's obviously a support level. Is it trustworthy? Is it the best support level? Is it has been tested many times? Obviously not. Okay, but it obviously, if you look at the result, if you buy it in this case, let's take a look at. Hold on a second, guys. Let's take a look at this entry. Let's say we buy at 12, and the stock ends up at 13 at one point, and then closes at 12.60. So in this case, if you buy at 12, you end up with a nice winner. Okay, and you can buy anywhere you want. Okay, if you buy here, the same result, assuming you stay in the position until the end of the trading day. Again, you assume the risk and you take the trade. Worst case scenario, what is the worst case scenario? The stop drops. Let me cancel this. So the worst case scenario is that the stock moves off the level, comes back, and then comes back down and takes you out at 1180, and you lose that position, whatever it was, $500, $200, the decision that you made prior to the entry. So again, here you use, this is an example where you use the support level to enter the trade. You don't have a resistance in this case, okay? The resistance is nowhere to be seen. Maybe the resistance is a round number, maybe you don't have the resistance, but you do have a tested support level, and you can act based on that. Again, not very easy, but an option. Again, we are in the business of trading, not in the business of not trading. Let's take a look at another example. Okay, let's take a look at this one. Okay, now things are way better. So we have a stock that gapped up and it's trending higher, and you have the option to buy it, of course, at 17, maybe at 16 if you see it in time. Let's say you didn't see it either at 16 or at 17, and now the stock is basically trading at this 1750 level, and you're thinking, what are you thinking basically? Can we enter a trade? Long, of course, because the trend is long. Okay, where is the support level? Okay, so can we trust this level 1740 to be our stop loss? Can we trust the VWAP to be our stop loss, which is a super important intraday support or resistance level? In this case, if we want to buy off resistance, we can buy a breakout at the highs of the day. That's 1780. That's a breakout over highs of the day. The stock will need a lot of volume. You can see that the volumes are actually dropping, and we're coming close into the holiday. And guess what? What happens is the stock is trending lower and then creates a consolidation under the VWAP. And here you can ask yourself, if you see it, okay, I want to buy at 1730 and take, in this case, a 12-cent risk on the trade, or maybe, yeah, let's call it 12-cent risk on the trade. Is this a good idea? In retrospect, it was a good idea, but again, it's not very easy to observe. But let's say it was a good idea. Okay, so in this case, you use the resistance at 1730 and the stop loss here at 1717. So you enter at resistance, which is the VWAP, or a couple of cents above, and you use the support as the stop loss. In this case, you risk 13 cents, and let's say it's 1% of the position. And again, the same ritual goes. You buy $10,000, the risk is 100. You buy $20,000, the risk is 200, because the risk is 1% of your position. And how much is a position? You divide $10,000 by $17 per share, and let's say it's 600 shares. And there are platforms where you can tell the platform, okay, I'm buying 10,000, and the platform is figuring out immediately how many shares. But again, this is very easy after going a month or 2 months or 3 months, whatever you'll know immediately that $17 is 650 shares. Let me see if I'm right. Hope I'm not disappointing. Okay, it's 588. So I was off limit by. Okay, so it's $600, just 600 shares. Okay, not 650. Okay, you can see that I'm not very focused myself as well. Anyway, so 600 shares, you buy a position that amounts to $10,000. You risk 1%, that's $100. And is it fine and dandy to take profits? Probably you won't be able to take profits, but again, the concept stays the same. If you acknowledge the risk or on the trade, meaning the entry point and the stop loss, you can take a trade. Is this a guarantee that the trades are going to work? Of course not. There's absolutely zero guarantee, but there is a guarantee that if the trades don't work, you're not going to lose more than that particular 1%. Why? Because you're trading a very liquid stock, and that stock, for example, traded in half a day, how many? 14.37, 14.5 million shares in half a day on Thursday. So that's nice. That means the liquidity is very good. Now, are we guaranteed that the stop loss is going to be executed exactly at our price? Of course not. There are no guarantees because the stop loss is a market order. But being, again, trading the most liquid stocks in the market, we should expect good results. Okay, we still have time for another example. Let's go to, I don't know, let's pick a Sunrun. Okay, I don't know if we talked about this stock, but let's do it again if we did. So, again, support, resistance must be applied to any trade. Where is the resistance? Where is the support? Where is our stop loss? Can we take the trade? Can we assume the risk? So this is a stock where the price starts to move higher very fast in the morning. It belongs to the solar energy sector, which was, if you remember it quite right, the most, the best performing sector on Thursday. That's before the holiday. And the stock runs from 9 in the morning. You can see in the 9:30 the stock gaps up and runs higher like crazy, and then tackles the 10 round number, moves higher and lower. And let's say we see this phenomenon here and we decide, okay, let's buy it at 10, and let's use the 980 as a stop loss. So instead of a 1% here, it's a 20-cent stop loss. That's 2%. Can we take the trade? Yes, we can take the trade if we assume the risk. So in this case, on a $10,000 position, the risk is, which is 1,000 shares, the risk is $200. If you don't apply yourself to the same risk, you need to either not take the trade or take a smaller position. Let's say you buy a $5,000 position. In this case, you buy only 500 shares and the risk stays the same, $100. And then the stock trades higher and at one point reaches 1070 and comes back, and maybe you see, we're not going to talk about targets at this point. We're going to do it in the next video. But you know already now that the stock is a winner after it reaches, in this case, 70 cents, which is 7% in the money. And you ask yourself, is it enough 70 cents or I want more? Maybe I want $1.50. So what is my target? We're going to discuss it in the next video. But I can do some things, I'm not going to be, dormant. I can, for example, move my stop loss from that particular level, which was, in this case, 980 to under the entry. So by moving my stop loss to under the entry, I create here a zero loss effect, which is very important. And we will continue to discuss this subject in the next video. Thanks again for being here with us. Do like, subscribe, and share it with your friends. And we have very little time, so see you in our next video.